Move podcast. I'm your host, Stratton Brown. I interview successful entrepreneurs from around the world to see what moves they've made in their lives to get successful and, more importantly, stay successful. I'm here to make sure you can create a better life for you and your family. Let's tune in.
Welcome to the Winning Move podcast. We have my favorite guest on, my friend Michael Zuber, extraordinaire. How you doing, Mike?
I'm doing wonderful, man. How are you? Every day Saturday.
I'm doing good. All right, I want to talk about the Elon Musk shit first,
Yeah,
and then we'll go into everything else.
Love to.
So even if he doesn't buy Twitter, I think he makes over $1 billion from all the ruckus he's caused.
Yeah, I don't disagree. It must be nice to have deep pockets. He bought deep, the deepest on the planet. He bought 9%. Then he did a hostile bid, and he's making some money. Yeah, I think you're right. I think he wins even if he loses. To your point, yeah.
Right, he wins even if he loses. And then, how do you feel about him just offering to buy the whole thing because he thinks everybody sucks?
Well, that's kind of Elon Musk's thing, right? He's not your normal human being. Yeah. And he doesn't do anything normal, right? He goes big. He ruffles a lot of feathers. I think the fact that he wanted to go after Twitter and make it a platform for free speech is amazing.
Yeah.
There's a lot of it's funny. He buys it for free speech, and then you see one side of the aisle lose their freaking mind because free speech isn't supposed to be free. I guess it was wild to see some kind of the reactions. Like Elon Musk is going to be some arbitrator of the right. I don't get that feeling. I think Elon Musk thinks both sides suck. I just think he wants free speech. So I thought it was interesting. I think his negotiation was off. I don't know if you saw it, but basically,
or this is my final.
Yeah, best and final. Very real estate kind of oriented, which is where I play. It's not how business is done. Twitter is a public company, which means they have a board. The board has a fiduciary duty. Frankly, the board would not be doing their fiduciary duty if they just accepted the offer, right? Their job is to protect the shareholders, and they must attempt to negotiate. They must look for other alternatives. If they just accepted, they probably opened themselves up to liability. So it was, if he really wanted it, that was a mistake, I think.
Okay, so we got that. So one thing to where the people freaked out about free speech, and then I watched a reel today of a dude talking about, like, this dude hates Zuckerberg. So he's like one of the bigger advertisers on Facebook and they shut down his account. Okay. And Facebook at a point in time, they're trying to create their own currency and everything else. And Mark Zuckerberg is a dictator because he's the only person who can take him off his board. And he controls free speech, but nobody says anything bad about Zuckerberg. And as far as Twitter stuff, a lot of people hate him.
Yeah. I don't know that that's fair. I think Facebook has crossed the chasm, or jumped the shark, whatever your analogy is. I don't think Facebook will be I think their heyday is over. They're on the downturn. Meta, or whatever they're called now. I think their influence on the world shrinks from here. And I think a lot of it is because they are, it seems like hate really takes off. Like, all negativity sells, right? Negativity gets clicks. We see it all the time on YouTube, right? You want to get a lot of clicks, talk about bad news, talk about, food lines and a real estate crash and, riots in the streets. If you want to talk happy, then, you're not going to get any views. So I don't know. I think there's tons of people that hate Zuckerberg. I think there's tons of people that hate Facebook. And again, I think Meta goes all in on the metaverse and goes bankrupt. Personally, I think they print money. So this is a 10, 15, 20-year journey to bankruptcy. But they're past their prime, in my opinion. They're long in the tooth. Just, they have such a deep footprint. They print money with ads. It's a very lucrative business. But 20 years from now, your grandkids won't be using Facebook.
Well, did you see so Facebook had that anyone who sells any type of goods on Facebook pays a 46% fee in their metaverse? Did you see that ad that came out?
Nah,
or that article that came out?
No, I mean,
wild, like madness.
Madness, yeah. They're They're not going to win. They're trying to take what worked to build Facebook into the metaverse, and it won't work. The technology, the era, their reputation, it won't let it happen. It's not like they're going out of business tomorrow. It's not like they won't make money for years to come. But I could seriously see them not being in business in 20 or 30 years. They'll be broken up. They'll be like AT&T.
Okay.
I think AT&T is a great example, right? They still exist, but they're nothing like they used to be. Right? They're more of a dividend stock than a growth stock.
Okay.
My opinion.
So, I love your bold statements. So, what are the big things that happened in the news this
Dude,
week?
lots of stuff. We had our CPI, Consumer Price Index, print on Tuesday.
Yep.
8.5. Something I've done the last 4 months is I've corrected it. Inside CPI, there's something called owner's equivalent rent. In this particular report, it came in at 5%. I happen to be in the real estate business with a worldwide presence, and I can tell you that the average rent's up 15% across the country. So I backed it out. I backed out 5 and I put in 15, and the correct CPI reading was 11.2, not 8.5. So bad.
And is that accumulating for gas? Is that accumulating for everything else?
Yeah, 11.2. I mean, it's not perfect, but it's correcting the largest error that I see.
Okay.
It's probably higher than that, but it's certainly correcting the largest error. So 11.2, not 8.5. Then we had PPI, Producer Price Index, come out at 11. I think it was 11.2. It might have been 11.5. And the reason that PPI is important is that is what wholesalers pay.
Okay.
And not that PPI will be a guaranteed future CPI, but it is a leading indicator, right? Think about you as a wholesaler, right? You're buying widgets from China.
Mm-hmm.
And these widgets now cost 11% more. And your goal is to sell them to the end buyer and make a profit
of 11%.
Well, I mean, you could want to make a 50% profit, 100, whatever you want to make. Your cost is up 11%. Now, you as the seller could eat that, right? You could shrink your margin. Some will, most won't. Some will eat some of it. Most will just pass it on to the end consumer. So, inflation's not by no means dead. Then we had the 30-year mortgage. The 30-year mortgage got over 5%. It got to 5.25%. That is the highest since 2009, Stratton. Right? So the 30-year mortgage is a problem. We not only have supply destruction, but now we'll have demand destruction. Lots of stuff going on. Then finally, yesterday we had Wells Fargo. Wells Fargo, one of the largest banks in the country, come out and tell you that mortgage demand is down 35%. So we know that
wild.
35%. So we know that the higher rates are making a difference, that demand is going to go down. Real estate's going to slow down. I am calling for real estate transactions to fall 25% this year and potentially 50% peak to trough. So real estate, if you're a real estate agent, mortgage broker, you might want to get a side hustle because not that business will stop, but it will get cut in half. So be careful.
What was the other? So what was it? I was at the cigar lounge and this guy's a mortgage broker and he was like, watch, who is it? Rocket Mortgage? Mortgage. He was like, watch Rocket Mortgage fired 2/3 of their staff.
Oh, easy. Yeah, it'll happen. Rocket Mortgage is like Better.com. Better.com has already laid off 40% of their staff. They basically got fat, dumb, and lazy on refinances. The Federal Reserve has broken the housing market. The Federal Reserve has something like 80% of all loans are less than 4.5%. Refi business dead, already down 62%, going to 80%. Purchase is going to fall off a cliff. Yeah, Rocket Mortgage will lay off at least half.
Yeah, that is absolute insanity. And then was it yesterday you were talking about stagflation? Like we've hit it?
I think 2022. The beauty about economists is they only talk about the past. I like to call the future because I'm making money decisions and it's hard. I don't have a time machine yet, so I can't go backwards. So I believe 2022 will go down as stagflation. High inflation, low growth. Sounds like 2022 to me. And I think a recession comes in 2023.
Jeez. Okay, 35% down more. Damn. So is now not the time to flip anymore? I'm buying 2 flips right now.
I believe you can still flip if you're flipping below the median. I think there's a part of the market, first-time home buyers still white hot. I think if you're flipping above the median, I would be way careful.
Okay. Both of them are below the median, so I'm good.
Yeah, you should be fine.
Yeah, both of them are below the median.
Nice. Yeah, I haven't bought a deal in 6 months.
6 months?
Probably, yeah. Might be 7 months. Yep. Good for you. I'm glad you got something.
And so how are we gonna protect the how are we gonna protect ourselves in this situation?
Well,
How are
if
you
you've
gonna
been
be prepared?
Well, if you were following my channel, you know that my protection started 6 months ago, right? I like to get prepared early. So I told you 6 months ago, time to raise dry powder. So for me, that meant going back and getting refinances, doing what I call recycling capital, going
Yep.
back to my base and taking money out and putting it in the bank. I do not believe cash is trash. I think cash is an option on future opportunities. Yes, I can lose 5, 6, 7% in the short term, but I plan to make 50, 60, 70% in the long term. So you should have been raising dry powder. You should absolutely get rid of all variable rate debt. Something else you would have heard me on my channel talk about is getting all my adjustables on 30-year fixed rate. The Hub in Fresno that is an office building. Traditionally speaking, office buildings can't get 30-year money. Well, I happen to have relationships with non-QM lenders that will do 30-year money on office buildings. So I went and grabbed some stacks on that. I have an apartment building. I did the same thing. So being prepared for what's coming means you should have been listening 6 months ago and getting prepared. So raise dry powder, remove variable rate debt, adjustable rate mortgages. Adjustable rate mortgages are what can take you down. It is probably what crushes the Canadian and New Zealand housing market because they only have 5-year terms. The U.S. is very, 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 very lucky that 96% of loans are 30-year fixed. So, we're in much better shape. Yep.
How many adjustable rate mortgages did you have? I didn't even know everyone else is on a 5-year. That's insane. That
Well,
does not make me feel comfortable.
all my commercial stuff was 5 or 7-year adjustable, which is more than half my portfolio.
Yeah.
I spent the last year getting out of all that.
You made a decent amount of money off the refinances then, right? Like pulling it out.
Yes. Yep.
And so talk about explaining more, and I think we talked about it last week, how you're like, yeah, cash may be trash, but I know my opportunity down the road is going to be magnificent.
Yeah, I think there's a lot of people that let's just pretend you had $100,000 in the bank. Just pretend. A lot of people, or maybe it's $1 million. I don't know, pick whatever number you're on at 10 million. A lot of people would look at that as you being stupid because you're guaranteed to lose 8.5% to inflation because everything's more expensive. Well, folks, Jamie Dimon, Warren Buffett, they have billions of dollars sitting in cash because they don't give a rat's ass about 1 year of inflation. They want to be running around when people are throwing away assets for nothing and they need cash. Yeah, I mean, remember what Warren Buffett says. You really figure out he's swimming naked when the tide goes out. Warren Buffett got Goldman Sachs to pay him 12% and gave him warrants that made him $1 billion because Warren had cash when the market got dicey. I am willing to sit in cash because it's an option on the future. And I'm willing to wait. I think the cash is trash mentality is stupid. It leads you to be over leveraged. It leads you to bad deals. I would much rather be the last guy at the table with cash so I can have my pick of deals. There will be people. I mean, just think about this. I did some research the other day, right? Lamborghinis and Ferraris, kind of nice cars, right?
Mm-hmm.
Lamborghinis and Ferraris had record sales in 2020 and 2021.
Oh, record sales. You couldn't find them.
Here's the deal. You look at those numbers, a large percentage, 20, 25%, were from people that milked the PPP program. They milked some different handouts, whatever it was. And they are horrible with money. And some of them are going to go to jail, but many of them are just going to lose it because their monthly cash flow is negative.
Doesn't add up. Yeah.
And then they're going to have to sell the Lambo or the Ferrari at a cheap price. I would much rather buy a Ferrari or Lambo at 50% off for somebody who can't afford to drive it anymore than run around and pay, 50% over, manufacturer's retail. I will happily wait for the idiots who want to live on the flash when I can go buy it on the cheap.
Exactly. So one thing that I think people need to understand too is that you have cash and you have cash flow,
Hmm.
or so you have both,
Oh yeah.
and multiple streams of cash flow too, and that's what I love.
Yeah. I mean, so I retired 5 years ago now. It's amazing. 5 years ago on my rental portfolio, one rental at a time. I have since built up multiple streams of income that doubles that. And I have a little bit of cash put away for opportunity. So I'm doing okay.
But you have the best of both worlds, right? Like people are like, "Oh, cash is trash." Well, generally, if you have enough cash flow coming in and you have a big chunk of cash, I think you're in the best situation. You
I,
refinanced out all your rentals. You probably cash flow more from those just because you got better rates
yep.
and you have all that cash in your pocket. Because when was the last time you really refinanced like your portfolio?
Yeah. So I didn't do a refinance. I did a couple of commercials in like 18 just because the terms came up, but
Uh-huh.
purposely refi. Oh man, not since like, shoot, 06 probably.
Right. So you had a
It's been
lot
quite a
of equity
while.
in there.
Yeah. Cause I was just buying. Yep.
Do you have a goal of like what you want to accomplish as far as paying a certain amount down?
No, for me, it's all about yield. I don't care if I have to put
Okay.
50% down or 5% down. I want to
No,
make
I
sure
was
my
talking
money.
about like paying down your assets, like paying down the
Oh,
actual
I'm
rentals.
sorry. I'm very lucky. Like when I was starting out, I was comfortable being 90% LTV. I'm nowhere
Uh-huh.
close to that now. I'm growing slower than I could because I want to be pretty low. So I'm more like 65, I think now, 65% on
Do you
purpose.
have like a certain amount that like certain houses you focus on that you're just like, hey, let's pay this one down, let's pay this one down, and like make it easy?
No, I do have a set of portfolio. I still have what I call the oh shit pile. Because again, I lived through the last crisis. I'm one of those guys who survived and thrived.
Uh-huh.
I have a dozen or so that are do not touch. Right. If the world
Okay.
came to an end and I lost the ones that are at 65, I still have these 12. Um, yeah. So I have a few that are tucked away. Um, that are like, emergent breaking case of glass,
Yeah,
World War III or whatever.
I like that.
Yeah.
Any other big news that we missed out on?
Um, no, I'm so excited for the true investors, right? The true investors that are doing the work. The market is coming to you. A market with less transactions means it's easier to find motivated sellers. The investors that learn creative financing, the investors that learn seller financing, the investors that really are about solving problems are going to crush it. If you are a speculator who got lucky on timing, you're going to go bankrupt, and I don't care. But if you're a true investor, I'm so excited for you what's coming. I haven't been this excited since 2010. 2010, I was picking up stuff in Fresno for 40 grand. That I'm that excited, not because of price point, but because of deal structures that I think are coming. I am wildly excited.
Picking up stuff for 40 grand. Like it wasn't even that long ago. Like even
Yeah.
when I first got started, stuff on the west side was going like if you had to buy it above 100 grand, you're like, no way, no how.
No chance. Yeah. Now it's
Yeah,
what, 180?
yeah.
Yeah.
Wild.
Yeah.
All
I got
right.
one on the west side for 32. That's probably 210 now.
All right. Well, you don't like owning stuff over there, do you?
I don't mind. I mean, there's a couple of there's a couple of blocks. So it's like, no, but I love '06.
Okay. Yeah, we used to market to '06 heavy. It's just kind of been
It got picked
bombarded.
over. Yeah, of
Yeah,
course.
it's been picked over.
It was the last cheap place.
Exactly. Like it was the '06 and '02 were the last cheap places, and now it's more of just like deals.
Deal
No like
specific. Yeah.
strong zip
Yeah, yeah.
code.
No, it's I think real estate investors should be, if you're truly an investor and you do the work, I think the next year or two is going to be pretty fun.
Awesome. Well, thank you so much for coming on, Mike. Where can people find out more about you?
One rental at a time. I have a book, YouTube channel, website, all that good stuff. Should be
Awesome.
easy to
Thank you
find.
guys. Thanks, Mike.
Mhm.
Thank you so much for tuning into this episode of the Winning Move Podcast. I hope it helps you make all the right moves in your life and business. Please make sure to go like and subscribe on any podcast platform that you're listening to, and make sure to go follow me on Instagram @StratDaddy.